rushing to fix home loan rates. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and want to have a look at this article from Yahoo Finance. Well, just discussing inflation fears prompt a rush to fix home loan rates. Now, I fixed my rate some time ago. We got 1.99, I think, with the Combank, and I was quite happy with that. I need my cash to do the renovation work here, so I'm not throwing anything else at the mortgage, and I wanted to minimize the cost associated with it. And frankly, I don't trust the RBA to not push rates up in the next 4 years, and I don't think I'm alone. I think a lot of people don't trust the RBA at all. I don't think anyone will be surprised if rates go up before they say they will. Can we bet on the TAB, guys? Let me know in the chat if there's a way to bet on this. Maybe put a cheeky 100 on when the RBA will raise rates. So let's look at this. The Reserve Bank of Australia may have decided to keep record low interest rates on ice again, but that hasn't stopped borrowers from racing to lock in fixed home loan rates before they are expected to increase. The RBA announced on Tuesday it would keep the cash rate at 0.1% despite property prices booming across the country, creating an affordability crisis. Well, the RBA doesn't care about property prices. They don't want to, Philip Lowe has said that they don't want to use the cash rate. It's not part of their mandate. It's not part of their mandate, everyone. That's what it is. They're calling for other methods to intervene in the economy to address the property boom. Maybe it should be part of the mandate. Like in NZ, maybe. With ongoing signs, the economy is recovering quicker than expected from the COVID-19 pandemic, including prolonged lockdowns in Melbourne and Sydney. There is growing speculation the RBA will lift the official rate before the forecast date of 2024. However, it hasn't stopped all four major banks, Com, Westpac, NAB and ANZ, from raising their fixed-term interest rates while cutting their variable rates. UBank, Bank of Queensland, and the People's Choice Credit Union have since followed in their footsteps. The out-of-cycle rate rises from the banks were being driven by increasing borrowing costs. Evan Lucas, Chief Marketing Strategist at InvestSmart, said there was no doubt mortgage holders were racing to lock in the best deals they could. Looking at the numbers of applications being made, it is elevated above historic norms. There's no doubt about it, he said. People are wanting longer loan terms. Most people are buying into 2 years, as that's the most competitive at the moment. The banks are trying to push people into the time duration that they expect the RBA to make a change. Property boom. Property prices, especially house prices, have continued to skyrocket across the country, up 22% just this year. Now remember, whenever we see this 22% rise, remember, property took a little bit of a shave, before. So we're off the back of some scary times. So that makes that 22% look all the more impressive. But then again, let's have a look here. Capital City house prices. Let me just refresh from SQM. And, well, yeah, it's not cheap. It's continuing to go up, guys. So, despite warnings the pandemic could cause property prices to plummet, the market only dipped before recovering quickly. Now, I remember that I did videos on that. We read all those articles. We looked even at the RBA modeling a potential 40% decline in property values. More and more, I suspect that was done with the intention to give our political leaders popular support to intervene so drastically in the economy. The Liberals now, look how much debt they racked up. Look at the government debt, guys. Hang on, let me bring it up here. Where do I have it? Government debt. There you go. Do you think conservative voters would have accepted all of this intervention if part of it wasn't a fear that house prices are going to collapse? Or am I just, getting too paranoid, too conspiratorial in my old age? Perhaps, but still. Makes sense, doesn't it? The September quarter consumer price index was released last week, increased to 2.1%. Its highest level since 2015. Job advertising, as revealed in ANZ's survey, rose 6.2%, which was in line with pre-Delta outbreak levels. Lucas recommended anyone looking to move to fixed-term home loans to carefully compare fixed and variable rates, as fixed rates may not necessarily deliver the best deal. Don't forget to ask what happens after the fixed rate ends, and what will the rate be after that. As record low interest rates help spur people to borrow more and continue to push property prices up, Lucas said there was concerns about whether some borrowers would be able to weather the coming interest rate increase. Now, here's the thing. People have buffers, everyone. People have buffers. You've got prepayments on the mortgages. You've got housing liquidity buffers. You've got the banks taking, well, forecasting interest rate buffers. And well, number one, hang on. Oh, well, that chart's broken. Number one is, well, government to the rescue, everyone. You've got home builder shooting up building approvals and just the huge number of loan deferrals. I make a joke about Mortgage Keeper. Would you be surprised if it happens? Would you be surprised if it happens? Maybe I'll have to make a t-shirt, Mortgage Keeper t-shirt. That's Australia, guys. It's property. It's a tool that the government uses to stimulate the economy. So, it's been over 10 years since the RBA increased the crash rate, he said. Yeah, I remember reading articles or research papers or reports about housing affordability where 3% was considered an emergency rate from the RBA. Now it's 0.1. The debt-to-income ratio is nerve-wracking, as many people have borrowed 6 to 8 times their income. That pressure to pay back their debt will get ever stronger, especially in places like Melbourne and Sydney. The increase could not just be hundreds of dollars, but thousands of dollars. The RBA last cut the cash rate in November 2020 in a bid to cushion the impact of COVID-19 amid widespread job losses and people being stood down. At the time, RBA Governor Philip Lowe said interest rates would remain the same until there was a sustainable increase in inflation, but added that wouldn't happen until wages experienced an equal growth. So let's have a talk about this one, guys. We've seen inflation start to trickle up. It's, well, shocking to a lot of people. First time we're really noticing inflation. Now remember, there is a lot of people will argue they're not a fan of the CPI, they don't agree with it, but that's what's used to make policy decisions. So with all the faults in it, we have to put up with it. Now, will we see wage growth continue with inflation? That's the big question. You know, there's this narrative, a narrative going on about labor shortages. Have you noticed? All around the world, the great resignation as people not going back to work. And then we also, on the other hand, have calls. We need 2 million more migrants here to Australia to help deal with the labour crisis. Yeah, they're going to do whatever they can to keep the property bubble going. What do you reckon? Anyway, I want you to have a look at this video about the call for 2 million additional migrants here in Australia, guys, over the next couple of years. Because, well, without international students and tourism returning, yeah, what's going to happen to property? You tell me. See you next time.